Oh my God, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is May 13th, 2020. Shout out to John Hill, one of my YouTube premium members. I love my subscribers, boy, I tell you. John Hill wanted to hear Power Rangers theme song, so there you go, people. Look, anything you ask for, I will play on My Two Satoshis. So there you go, John Hill. Go Power Rangers. Let's get into it. And hope you guys are doing well today. Can't believe he asked for that song. Today we're going to be looking at, yes, the halving is done. All the hype is over. Now what happens? Where do we go from here, people? We'll talk about that today. I've got an article out of the Bitcoinist about that very topic. We'll also take a look at an article out of CoinGate today about Bitcoin transaction fees going up by 10% after the halving. What does this mean? Why? How will it impact miners? So on and so forth. We will look at that here today as well. And lastly, this is for my XRP fanboys. 90% of XRP transactions are, guess what? Empty. You know, this one caught my eye, and actually, I didn't even know about this. And actually, shout out to my man Gaston Cruz for this article. I didn't even know about this. He brought this to my attention. You know, I'm not an XRP fan, so he thought that would be funny. All three articles coming up on this episode of My Two Satoshis. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. And also, don't forget, you still have the chance to buy crypto with zero credit card fees over at crypto.com. Sign up today. I'll leave a link in the description below. If you do sign up, you actually get $50 worth of crypto credited to your account once you add, I think, something around $150 or $200 worth of crypto. You have to buy, I think, 50 MCO tokens. So check that out. Sign up today. Use the link in the description below. The promo code is CBLOOD. That's C, the letter C, blood. Let's take a look at the heat map too. We've got Bitcoin up nicely today, almost 5%, 9,272 bucks post halving. We had a dip prior to the halving. It looks like we're making a run back up. I'm going to show you some of the technicals in a second here. Ethereum is up 4.4% as well to 198 bucks. EOS up 3.5% to $2.52. Litecoin is up 5% to $43.35. XRP up 2.3%. We've got Tron up slightly today. We've got Tezos up slightly 1.3% to $2.56, and Bitcoin Cash is up as well. It's now trading at $238.42. I do have to say that we are seeing a slight divergence in correlation with crypto and the stock market. But I will say we're not out of the forest yet when it comes to correlating positively with the stock market. I need to see about another 5 or 6 days worth of trading just to see, because, you know, this is not a 100% correlated asset right now. Cryptos, or I should say specifically Bitcoin and the stock market. It's not 100%. I would say it's somewhere between 60% and 70-80%, somewhere around there. So you're going to have days where they're not correlating, but we've seen Bitcoin since the halving kind of decoupled from that correlation a little bit. So we'll have to see what happens here in the next few days. The drop was purely Bitcoin related, so that had nothing to do with the stock market. However, I think if the stock market starts having these 1,000-point days down and up, if the VIX starts going crazy, see the VIX is up today 6.7%. So if the VIX starts getting above 45, 50, we start getting above there, I think you're going to start seeing more liquidation of cryptos. But we'll see. That's just my thesis. But if we look at the technicals, I drew this green trend line over the weekend as this drop was happening. It was happening literally while I was recording the live stream off the chain. I think at episode 38. Go back and check it out. Epic episode. You want to talk about trolling? We had someone troll us, and they got all of us, man. Oh my gosh. Shout out to that guy. He trolled the hell out of us. Me and Rice Crypto had him on as a co-host. Man, we had a lot of fun. So definitely check out episode 38. But we drew this line. I drew this trend line live while we were recording. And I think it was right here on that first dip. That's where I drew the line, and it bounced off of there 2 times thereafter. So we're starting to trend right back up to the 94. That's going to be an area of resistance. So that's the area we have to watch, because what we need to watch out for, I'm just telling you right now, we could be setting up for a head and shoulders. We have to be careful with that. As you guys can see, this could possibly be setting up for the head and the next shoulder here. Okay, so shoulder, head. You just got to be careful and watch that. If we break above 3,400, that's going to be a very bullish sign. So that's where we are with things today, guys. Let's take a look at the first article. 98% of XRP transactions are empty. Wow, new report or research paper finds that several major cryptocurrencies are largely used for the blockchain equivalent of spam. And I know people are going to say, you know, EOS is definitely, I know that. We're going to look at this article. Maybe it talks about EOS as well. But let's see what it says about XRP. It says the research paper examines transactions on several major blockchain platforms. XRP blockchain said it's fraught with zero value transactions. Paper says bulk of EOS transactions used in valueless airdrops, while majority of Tezos activity used in maintaining consensus. So we're seeing, and this shouldn't be a surprise to any of us. We're still at the point where no one is really using these blockchains. To me, is more about what these blockchains can handle. Because when the masses, if that comes, we need to be, these blockchains need to be able to handle these vast volumes of transactions. So whether it's their real transactions or not, I think for the ones that are looking to be like that application layer type blockchains, it really doesn't matter, in my opinion. But the research paper has found that the majority of transactions on the three major blockchain platforms are valueless. In many cases, they are largely used for spam or for airdropping worthless tokens. The abstract states that their analysis reveals that only a small fraction of transactions are used for value transfer purposes. In particular, 95% of transactions on the EOS blockchain were triggered by an airdrop of a currently valueless token. In Tezos, 82% of the throughput was used for maintaining consensus, and only 2% of transactions on the XRP ledger had any value of transfer. So XRP being the worst here, it looks like. The paper was done by a PhD student, Daniel Perez, University College of London, and they tracked different transaction types on the above blockchains, noting their purpose and value. The authors conclude that while the above chains process a lot of throughput, the majority of it may be essentially useless. And it probably is. You know, it probably is. As I stated, though, what you're looking for, honestly, is how well can a blockchain handle this throughput. To me, we're still early. No one's using blockchain like that. I'm gonna be honest with you. We all know that. So at least you could say with these blockchains, I like Tezos and I definitely like EOS and Telos as well, which is a sister chain of EOS. You need to look out for that one. Low volume, under the radar, but they're even doing it in a better way than even EOS is. But what you want to see here and look out for is how well it can handle the throughput. I always try to point you guys to the Blocktivity website, and that's blocktivity.info, so that you can see where, you know, these blockchains in as far as value or transactions, where they stack up, not the price. I think value and seeing how many transactions you can produce on the blockchain will eventually appreciate the value of those tokens once people are really using these blockchains. EOS still at number one with a whopping 65 million transactions a day in a 24-hour period. XLM is a far second at 3.1 million transactions. Ken is still up there, 1.3 million. In comparison, if you take a look at like Bitcoin, 915,000 transactions in a day. Ethereum not too far behind. So you got more transactions on Bitcoin than Ethereum. But what's disturbing, and we're going to talk about this in a later article here, is how Bitcoin is just staying at capacity. It's at 100% capacity, guys. And I mean, no one's really even using this thing. Ethereum is at 64% capacity. We've got EOS at 50% capacity. But look at 50% capacity, EOS is doing 65 million transactions or operations in a 24-hour period. And look at the young buck Telos. I've been telling you guys about them. 544,000 operations. Their capacity is still very low. Not even 1%, 100%. Look at Tron, way down there, number 10, only 321,000 operations a day. So this is what, if you really want to see the value and what's going on these blockchains, right? Because they're supposed to be, that's the whole point of a blockchain, is to have transactions going on it and being processed and being able to handle those transactions. If you want to see the true value, you need to check out blocktivity.info for that type of information on a real-time basis. As the subtitle says, the real value of blockchains. The article goes on to say regarding XRP, the paper states that the throughput on XRP Ledger during our observation period appeared to be fraught with zero value transactions. We learned that both transaction volume and token value on the XRP Ledger are highly manipulable. And also, Decrypt Media reported in the past that XRP transactions are also used to trick exchanges. XRP is unique in that it can show transactions that have been paid in part, unlike other blockchains where you either have a transaction or you don't. This means there are two different amount received parameters, and if the exchange uses the wrong one, they might credit a trader's account with far more XRP than was sent to the exchange. And to sum up this report, it says bottom line is the 3 blockchains studied in this paper demonstrate capacity to carry out high throughput. However, the massive potential of those blockchains has thus far not been fully realized for their intended purposes. Yeah, I agree. And I agree with that. You guys let me know. But, like I said, you look at Ethereum or even Bitcoin near capacity at very low amounts of operations in the 24-hour period. Now, I would say that I think that Bitcoin and Ethereum probably transfer the most value over the blockchains without a shadow of a doubt, Bitcoin being probably number 1, of course. But yeah, that just lets you know, I wouldn't even compare like Bitcoin to EOS or Tezos. Bitcoin is a currency. It's not a smart contract type of blockchain where you're going to be building dApps on it per se. But you can compare EOS, Ethereum, Telos, XLM, Tezos. You can compare all of those. Tron. Those are kind of in the same league. And that's what you want to look at when you're trying to compare these blockchains. And speaking of capacity or being at capacity, Bitcoin transaction fees went up by 10% post-halving. Here's why and how it will impact Bitcoin miners. It says on May 12th, right after halving, Bitcoin miners reported fees required to move value using Bitcoin from one address to another, temporarily spiking by 10.5%. The Bitcoin network, as programmed, halved its Bitcoin mining rewards from 12.5 Bitcoin to 6.25 as the platform gradually shifts from a reward-based system to a transaction fee model into the 4th epoch. Meanwhile, it will be more difficult, takes more work for new Bitcoins to be released into the ecosystem, meaning scarcity will increase. So the key thing we want to start paying attention to as these halvings happen every 4 years roughly, we're shifting in Bitcoin to a transaction-based model. What does that mean? Notably, and as expected, the 4th Bitcoin epoch was marked by a sharp spike in transaction fees. The halving is necessary to build network effects. I gave you an explanation. This guy says it rewards early miners. As the network builds, transaction fees grow. Miners are necessary, confirming transactions along with users validating them with nodes. So in the last month, the average cost of transactions over Bitcoin surged from 39 cents to $3.19 on May 8th before dropping back to $2.79, which is still a huge increase. Huge increase in fees, people. And it finishes up by saying since the primary source of revenue halved, the short-term percentage shares of fees would only edge higher, if not double. So this is, are we thinking about what's going to happen in the future? Because at some point, the reward for mining a Bitcoin will be so minute, we're hoping on the price heading higher. It has to head higher. So that brings up the whole question of, it's almost important for Bitcoin's price to go up for it to survive. That's a point that I don't think many people are thinking about right now. I really don't. Bitcoin's price needs to go up exponentially every 4 years in order for this thing to survive. Let me know your thoughts about that, because we're going to be transitioning from, as it stated, a mining reward system to a transactional based system. And in order for that to happen, that Bitcoin price got to keep going up. Last article, thought of Bitcoin is the worst behind for Bitcoin as it recovers from pre-halving dip. After concluding its 3rd ever block reward halving, Bitcoin has shown some immense signs of strength. From both a technical and fundamental standpoint, the cryptocurrency now has recovered a good portion of its losses that came at about as a result of the recent dip, leading many analysts to conclude that this could mark a local bottom. Bitcoin's hash rate has also remained quite high in the time following this event, which is a sign of strength that points to the cryptocurrency's network health. Many people are saying that we will see a hash rate drop because the incentive to mine Bitcoin just got cut in half. Some investors have said were concerned that Bitcoin would see a sharp sell-off following the event due to the hype fading, although its recent price action has seemed to negate this notion. And the most important part is that Bitcoin's network hash rate has remained very healthy. Because the reduced block rewards also reduce miners' profitability, it was also thought that many smaller mining operations would capitulate as a result, potentially leading to the hash rate diving. But it doesn't seem like that is happening so far. Glassnode spoke on this very point and said this effect appears to have been mitigated by global economic circumstances which make mining cheaper, such as extremely low energy prices and the devaluation of currency in which mining overhead is dominated. This one analyst said buying the Bitcoin halving dip has paid off thus far, with prices grinding higher. He said he thinks that the 93-9500 area will be a big resistance test. If we close above 9,500, then I would expect us to start making newer highs. That's exactly what I said here. But again, you have to pay attention to, guys, a potential head and shoulders occurring here. We just got to be careful here. This could be a trap. I hope it's not, but I'm leaning toward it being a head and shoulders move. I'm gonna be honest with you, but we will see. We will definitely see, because I'm still sticking to my guns and saying that overall, I think Bitcoin is going to continue to correlate with the equities market, and equities aren't doing well today. As we looked at earlier, equities are not doing well right now, currently down 516 points. So we'll see what happens. That's what it closed at today, but we'll see how things pan out from here. Shout out again to my man John Hill, one of my premium YouTube members. He gets those song requests put to the top. I don't know why, but Power Rangers theme song. Hope you guys enjoy it. Make sure you like, share, and subscribe if you found this video informative. Click that bell to receive more videos like this. I'm out of here, people. Holla!